What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to do something special. We're going to take a look at a trade setup from a couple weeks ago on YouTube, and we're going to look and see how the trade played out and analyze potential psychological reactions to the trade and walk through the discipline, the strategy, and the process to follow once a trade setup has been posted, because successful trading is a lot more than just finding a trade setup and placing the order and letting it run its course. It's largely about following your process and managing your emotions. It's about execution. So this video is going to be about execution. Let's get right into it. The trade setup we're going to analyze from 2 weeks ago was NuScale Power Corporation. That is the next generation nuclear energy company, symbol SMR. And in that trade setup, the game plan was, instead of chasing at all-time highs, the game plan was to wait for a pullback to the first support level and look for a bounce off of that level and then bounce to new highs, okay? And this is the way the trade played out. The game plan would have been to place a buy limit order at the top of the support level, 35.62. Have a protective stop right here at this red dotted line, just below 33. Our target in that video was 47, and that's because there wasn't any clue of technical resistance, so I just set the target at 5-to-1 reward to risk. Now, so we could still have the target at 47 at this particular point. But let's see how it starts playing out right away after placing those instructions. Okay? Starts coming down, starts approaching the entry point. So a trader might be thinking, might be getting a little eager here, might be getting a little anxious, maybe a little over-eager. Like, this is taking a long time. I just want to get filled. Everyone's talking about this thing going up, 5, 10, 20 more points. A less experienced trader might say, I don't want to wait. I want to buy it here, right? So that would be called impatience. They'd just be impatient and waiting for it to get filled. That's not disciplined, and that's not the process. We're simply waiting for it to pull back to 35.62. And if it doesn't, that's fine. We just miss that trade and we move on to the next one. So we don't get over eager. And then, but it gaps up immediately. The very next day, it goes to 45. A less experienced trader might think, I knew that was going to happen. Why did I follow that video? John told me to wait for a pullback to 35.62. I knew it was going higher. And then I don't want to miss this one. I think it's going to 60. Just gut feel. That trader places a market order and buys at 44, 45. That particular trader immediately would have gotten spanked for that lack of discipline. And the stock would have been down 6 points the very next day. What was that trader thinking the very next day? I can't believe I did it again. I can't believe I succumbed to FOMO one more time. Here I am sitting on losses again. I keep doing it. Well, those are the feelings that professionals don't have anymore, because professionals have discipline and they got a process to protect them from succumbing to FOMO, okay? So if you want to not have to worry about all the anxiety, all the emotion, all the fear and greed that's going on in this particular price action, you have a process of waiting for a pullback. And if you get your pullback, you're good. You got your safety net just below there. And if it doesn't pull back to that price, then you just move on and find another trade. There's 7,000 stocks to choose from. Okay. So what happens next? Patiently waiting for that pullback. And then about 10 days after the instructions were sent to place that, to place the buy limit order at 35.62, would have got a fill just 2 days ago, Monday morning. So he dropped down to 35.62, would have been filled and bounced right off of that 35.62 price point, okay? Now, at that point, our target would have been, if we hadn't changed it, still up at 47. But there now is a resistance level to consider, because there was a clue right here that big funds, big sellers showed up. So they halted that rise and knocked that stock back down. The clue here is that next time it gets to 42.81, that those sellers will sell again and knock it back down if price gets back up there. So instead of having our target at 47 up here arbitrarily, now that we have a clue in the chart we're going to move our target to 42.81, and that would be about a 3-to-1 reward to risk, which is still a very favorable reward to risk. So got filled at 35.82 if would have placed that, I'm sorry, 35.62 if you would have placed that, that order. And the very next day jumps right up to your target. 7 points out for the trade, and then rejected right off that resistance level. So it was a good idea to focus on, to move that target to this new resistance level once you identified it, because the sellers did knock it right back down again. So the entry would have been right here, 35.62, according to the video from 2 weeks ago. The target was right there, according to this new resistance level that popped up. And that's a little over a 7-point bounce, which is about a 20%, almost a 20% return on a trade in 1 day. You get filled the very next day, it's up 20%. Okay, which is pretty impressive for a 1-day bounce. If you had bought 100 shares at 35.62, the very next day you'd be sitting on a $700 profit. A $500 purchase, you'd be sitting on a $3,500 profit. And if you would have bought 1,000 shares, which really isn't that much if you were using margin capital up front, you could have been sitting on a 1-day profit of more than $7,000 if you would have simply followed this trade setup and moved the target based on that resistance level. So if you like trade setups like this and you want to see more of them, I'll do more of these. This is a very basic trade setup. I'll do more of these basic trade setups on YouTube here going forward. So stay tuned to this channel if you want to see more of these basic trade setups. But if you want to see some of the more advanced trade setups, so I've been trading for over 30 years. I've got a whole quiver of arrows, of trade arrows, different strategies, more advanced strategies, oftentimes that have greater reward potential relative to the risk. A little more advanced trade strategies, if you're interested in those, I will be launching a new active trader trade alert service. I'll be doing that with Equity Empire, my new company with Colin Teddards, and we'll be launching that trade service in the course of the next week or so. If you would like more information on those more advanced trade setups, simply go to myequityempire.com/earlybird. It's myequityempire.com/earlybird, and click on this button here that says join the Trade Alert Service VIP waitlist. Okay. All you need to do then is put in your name and email, and when we launch the product, there's no commitment. We'll simply send you an offer that's going to be a no-brainer. It's going to be such a value proposition. It's making me nervous to even be thinking about launching at such a low price, but it's going to be a great value for the service we deliver. So let's wrap up today's session, folks. Hope you enjoyed it. Hope you learned something if you're new to trading. I'll be back once again for more free trade setups on YouTube. And once again, we are launching this more advanced trade setup service in the course of the next week. Until then, wishing you the best of luck in your trading and investing, and we'll see you soon.